Rashmi and Geeta are partners sharing profits and losses in the ratio of 3:2. Their balance sheet as on 31/3/2018 is as follows. This is problem number 7, question booklet, page number 71. Have a look at the asset side, cash at bank. So we have to open a bank account instead of cash account. Next, bills receivable, sundry debtors, stock, machinery, furniture, goodwill. All these 6 assets will be debited to realization account. Then coming to the liabilities, sundry creditors, bills payable, both are outside liabilities to be credited to realization account. Rashmi's loan, remember Rashmi is a partner. Look at the partner's name and try to understand whose loan it is. So Rashmi is a partner. Partner's loan will come straight away in the bank account, credit side. Then reserve fund is shared among the partners in the partners capital accounts. Then you have partners capital, Rashmi and Geeta. Next, coming to the information. On the above date, the firm was dissolved. The assets were realized as follows in information A. Bills receivable 7,500, sundry debtors and stock at 10% less than the book value. So they have not given the amount, how much money has been received. We have to deduct 10% and find the amount. Machinery realized 5% more than the book value. So we have to add 5% to the balance sheet value. That is the amount realized. Then goodwill realized rupees 12,000. Coming to information B, furniture was taken over by Geeta. Remember, Geeta is a second partner. So instead of selling the furniture, furniture has been given by the business to Geeta, or you can think as Geeta has taken over from business. First time we are getting this. Next, dissolution expenses were 600 rupees to be paid. D, all the liabilities were discharged in full. It is paid in full. Prepare all the 3 accounts like earlier, the same thing. We'll move on to working the problem. Page 71, problem number 7. So we are preparing the realization account over here. I'm ready with the format. So let us go for transferring all these 6 assets to the debit side, starting from bills receivable. Okay. Bills receivable and sundry debtors, let us take. Bills receivable 10,000, debtors 20,000. Next, 2 more assets let us take. Stock and machinery, both are 15,000. Next is machinery to be transferred to realization account, 15,000. 2 more assets are left, furniture and goodwill, 10,000 and 30,000. To furniture account, 10,000. To goodwill account, 30,000. So all 6 assets which can be converted into cash has been debited. Let us move on to the liabilities side. Sundry creditors and bills payable, both are 10,000. We will enter on the credit side. Buy sundry creditors account. Next, by bills payable account. Both are done. Rashmi's loan will come in bank account, reserve fund and capitals will come in capital accounts. Coming to the assets realized by the business, that is selling the assets and receiving cash. Let us go for the first one. Bills receivable 7,500. So as I told, money received will be entered on the credit side of the realization account. Instead of cash account, we are going for bank account because it is given in the balance sheet cash at bank. So first one we go for bills receivable. Amount is given very clearly 7,500. Yeah. The next one we have to be careful. Sundry debtors and stock 10% less. Underline the word less than the book value. Book value is balance sheet value. So let us see. Let us see the balance sheet value of debtors. Balance sheet value 20,000 minus
18,000.
minus 10%, that is 2,000. So that comes to 18,000. Next, stock book value 15,000 minus 10%, 1,500 less. So money received is 13,500.
13,500.
So less means we have to deduct from the balance sheet value. Then we have machinery realized 5% more than the book value. So underline more. Underline more. So machinery also 15,000. More is plus 1,500. So if you add both 16,500, then you have the goodwill realized 12,000.
Sir?
Ah.
Sir, it's not 1,500, it's 750.
How much percent? 7. Okay. Fine. It is 5%. Okay. So
15,750.
15,750. 5% increase. Okay. Done. So goodwill 12,000. Then you have next adjustment. Furniture was taken over by Geeta at 8,000. So instead of buy cash or buy bank, it is partners capital account. So Geeta is taking over furniture, only one asset. So I will take it in the outer column. So I have written there buy Geeta's capital. This is the entry. Furniture is only an information. So this 8,000 has to be debited to Geeta's account later. Next, dissolution expense 600. All liabilities were discharged in full. So let us go for payment. Instead of 2 cash, we have to have here 2 bank account we will be having here. So first they have given dissolution expenses 600. Then liabilities were paid in full. So sundry creditors 10,000 paid in full.
Bills payable.
Bills payable also paid in full. So discharged, as I told, the word discharged is paid in full. So all the adjustments are done till D. So we can go for balancing the realization account. Before that, let us total the assets realized by selling the assets, then the liabilities paid. What is the amount? Let us check.
66,750.
Very good. 66,750 is the total amount received. Total amount paid is 20,600. So if you see debit looking more, $1,20,600. We have to minus these values from 1,20,600. We have to deduct. Check the balance. How much is that? 25,850 is the balance. This balance is the two sides difference, that is called as realization loss. It has to be shared among the two partners, Rashmi and Geeta. 25,850 into 3 by 5. Geeta, 25,850 into 2 by 5. 25,850 into 3 by 5.
15,510.
15,510. Then 10,340. So this is realization account. Any questions you have, you can ask me. Otherwise, I'll move on to the partner's capital account and the bank account. So two partners are there. So I'm taking two amount columns over here, Rashmi and Geeta, under combined partners capital account. So let us see the capital first. That is opening balance brought down, which is on the liabilities side, because it is liability credit balance 30,000 and 40,000. Opening balance brought down. Then we have reserve fund on the liabilities side 10,000. This 10,000 to be divided in 3:2 ratio among the partners. $6,000 and 4,000. So from balance sheet, we take capitals and reserve fund, then all transfer entries. So you have here by Geeta's capital account. So this becomes to realization account. So what Geeta has taken over, she has taken one asset, that is furniture, for rupees 8,000. So only for Geeta, asset taken over 8,000. So then we have one more capital account here, by partners capital account you find. So this amount is a loss for the first partner, and 10,340 is the loss for the second partner. So we have to enter that one. Then we have to go for balancing. Nothing else left in the capital accounts. We have transferred capital, we have transferred reserve fund, We have transferred asset taken over. We have also transferred realization loss. So after that, we have to find what is the amount payable by the business to partner or business is supposed to receive. So if you look at it, Rashmi is having more credit balance, that is 36,000 minus the realization loss. So amount payable by business to her is 20,490. Same in case of Geeta also, 44,000 is the credit minus two entries. What do you have here? So amount payable by business to partners is this. That is a balance amount. We have got this because of credit minus debit, balance amount. The meaning of that is cash paid. I have written as to bank account instead of to cash account. The bank is the giver, credit the giver. Partners capital accounts debit to bank account. So you can see here Rashmi's account debtor to bank. Similarly, Geeta's account debit to bank. So that is nothing but cash paid. Rashmi and Geeta are receivers, debit the receiver. Bank is a account, real this one nominal account, real account. So there we pay there the cash paid for the business. Personal account. So cash paid. Credit what? Goes out. So from bank, money is going out. Then coming to the bank account, we have 5,000 in the balance sheet. First, we have to take from balance sheet, balance brought down, and remaining all transfer entries. So asset realized, we have here credit side of realization account. We have to write that one over here. Then liabilities and expense paid, 20,600. We have to write here on the credit side as by realization account. Then Rashmi's capital account, 20,490. Then 25,660 is Geeta's capital account. You can see all credits all on the opposite sides. Then we have left with one amount, that is Rashmi's loan from balance sheet, that is 5,000. Always partner's loan will come in the cash or bank account. That is the partners are the receivers, bank is the giver. That's all is the value what you get therein. So if you balance both the sides of bank account, it is 71,750. That means money received, money spent, both are same. So bank account, both the sides equal means your problem, what you have worked is correct.